Good morning. I'm Frostad, President and CEO of Purepoint Uranium Group. We are a uranium exploration company working in northern Canada. We are currently fully funded, and we are drilling on 3 projects at the moment.
Fully funded and drilling on 3 projects at the moment. That's good news.
That's always good news. It's been a while.
Well, you're here in London, talking to the street, talking to investors, talking to anyone who will listen. Quite frankly, uranium obviously continues to be of interest. I think in general it's moving in. So how are the conversations over there?
The conversations are interesting. I think we've kind of gotten past that everybody running around the street yelling uranium, and we're now talking to a lot of people that really want to understand what really is going on and why are people excited about uranium? Why has this been going on for so long? And really what's been caused, the cause and effect. We're getting back down to a lot of basic conversations as to supply and demand around uranium and nuclear. I mean, the nuclear attitude's changed massively over the last 10 years. And
1 year.
Well, 1 year, 6 months.
Thank you, Mr. Putin, quite frankly, on that one, because energy security has become a real thing. And then I think politicians have been given permission to talk about nuclear openly without fear of losing votes or whatever it is.
You see Australia flipping all of a sudden after decades and decades of avoiding nuclear, and even Ontario and Canada were pushing forward on initiatives, and Germany, and the list goes on.
Right. So anyone listening in, okay, the uranium or nuclear thematic, therefore uranium thematic, very, very strong at the moment. So I don't want to get into all of that. I want to talk about you and what you're going to do. So obviously you're over here, you've got money at the moment, drilling on 3 projects. You've got some JV. Remind us of the projects.
All the wonderful things we do.
Yeah.
Well, we've been operating in northern Saskatchewan, Canada, for 10, 15 years now. And that particular area is where all of Canada's uranium comes from. It's known for its incredibly high ore grade. The 2 mines that are currently operating up there are mining at ore grades of about 20%. So it's an oddity on a global scale. And we have got 12 projects up there right across the basin, most of which are sitting adjacent to or on trend to other major finds in the area. Our primary project right now we focus on is called Hook Lake, and that is our joint venture with Cameco and Orano. So we know we're 2 of the largest uranium suppliers in the world. And they're very supportive of that project. It's a very important project for them, and it helps to validate the fact that it is truly a real project with real potential, because they make it very clear that they can't get budget for something like that unless it looks like it might be able to produce big pounds.
Right. So before we move on to the projects, so Orano, Cameco, everyone knows in Canada, everyone knows who they are. Orano, the French outfit. We've talked in the past about allocation of capital. It's great having them as partners, but if they're not spending money, they're not doing anything, you're kind of out of control, right? So tell me exactly what they're doing there.
Well, it's been a bit of an accordion thing, because they react to the markets the same way as everybody else. And the challenge we always have with them is that they have a 5 to 10 year outlook, trying to find feed for their mills, and we have about a 5 to 10 week outlook, trying to find our next piece of news. So, so we tend to follow them on a budget size. They've allocated as much as $5 million in 1 year, or as little as $1.5 million to 2 million. And we will start in the summer with those conversations. But the onus is on us as the operator to come forward with a plan. This is what we want to do this year. This is how we want to do it. They beat us up technically. And we all come to agreement, shake hands, and leave, and we go do the work. They've financially supported the project every year since we started the work.
Okay, I guess what I'm trying to get to is you've been around 10, 15 years, right? Great. You know the space. You know Athabasca Basin, and you got a good team doing some stuff there. But we've seen a lot of M&A activity, right? We've seen big companies and small companies kind of step in, consolidate some of these smaller assets into their own portfolios. We've seen, I think, UEX. Obviously, transaction a lot that, like you, have a big portfolio of projects at different stages and phases. You're going to be quite attracted to some of those acquirers at the moment because you give them the headline, right? right? But you wanted to advance the stuff yourself, one presumes, and I imagine so do your shareholders, and trying to drive that value. So how do you make yourself defensible, or how do you get yourself out of a position with, say, Cameco and Orano perhaps are working on a different timeline or agenda to you, because they've got their own stuff to do, right?
Sure.
So I'm just trying to, these are all the questions that you mill around with at the board meetings, every month, I suspect. So what's the thinking? What's the strategy? How does this thing really get going?
Well, as we know, uranium's a small market.
Yeah,
more or less
in a small market.
Yeah. And you really have to look at all of us in a bit of a different light. You've got your explorers, you've got your developers, you've got your producers, and they're three completely different businesses. So a lot of the M&A, you're not going to see a lot of M&A in the exploration side, because as somebody once said to me, you take two $25 million companies and merge them, and you get one $25 million company. So and it really comes down to a project by project basis. So any of the transactions you see with explorers is once they've identified something, once they've taken it to some sort of a resource size, then they have an asset that they can exit or transact with. So I don't think you're going to see people buying necessarily. I mean, it could happen, but buying exploration companies, particularly someone like us who's got 12 projects. Maybe one is of interest. You wouldn't come in and want to buy the whole company just to get at the one necessarily. Maybe you do. So it's we don't have to defend ourselves in that way. The biggest trick we do have is making sure that we've got as many balls in the air as possible, because it's a tough go to find these things. They're not laying around, and it's not a Hail Mary, and it's not one project. And any of the discoveries you've seen over the last 10, 15 years weren't just an overnight success. Someone's been doing a lot of work on a lot of projects in a lot of areas, and one finally hit gold.
Well, yeah, making discovery is hard for sure, and we'll come back to that. But I just want to stick on this kind of defensible component, because I think it's really important, because people are making acquisitions not necessarily because I think the additions to the portfolio are valuable. It's just that they've got cheap capital now, because they've seen huge run-ups in their own stock price for whatever reason, and they're going out and trying to buy effectively pounds on the ground, if not now, into the future. So I think deals are happening. I agree with you about two $25 million companies to make one $25 million company. That does happen a lot, but I think when you kind of got a bigger entity with a bigger balance sheet, not necessarily revenue, just a bigger balance sheet, will come in, and just for a story for now, whilst it is biding its time to see what actually is happening with this uranium market, which works at an interminably slow pace. Everyone needs news. And
I think we had these conversations 10, 12 years ago as well, in that as a company that has 12 projects at various stages of advancement across the entire basin, if somebody wanted to step in and do a basin play, we'd be a good starting point. Yeah, you got a place to start, and we talked to Rio Tinto about that quite a bit back in the day when they were interested in uranium and came in and out. So but it's easy to see those people coming. Right. Yeah. It's easy to look at the Denisons of the world and the UEXs and the Ancors and try and figure out what their next move is going to be in the Ancors. Yeah. Because there's not that many pieces on the chessboard. That's right. So you can kind of see these things coming. So when we talk about there's a lot of M&A going on, well, yes, but you can kind of see that it's very specific in terms of what makes sense and what doesn't make sense. So I don't think we're going to see somebody come out of nowhere and start trying to create a brand new uranium company.
I agree with that. So I'm talking, and we're certainly inferring, it's some of the existing larger players who have been doing that and may continue to do that. There's also a lot of new entrants, which is stealing your thunder. They are stealing the news cycle by being new uranium entrants into the marketplace. And we've seen that down in the US, and obviously Athabasca Basin.
And that has been an issue for us. Yeah, we recognize that because we have been around for a while, and during the downturn, we weren't doing a lot.
Okay, wait, I'm going to give you a chance, right? So we say there's these people coming, stealing your thunder. They're coming in sometimes with assets which are, we know, not that good, but it's a story, right? And they're going to give it a go, recycle it, rinse and repeat. But they're new, they're fresh, exciting. Your story's been around 10, 15 years. Maybe people are a bit tired of it. So what's the upside of a company like yours?
That's right. Like what you're saying makes sense. And there's the whole fresh and new thing that we see coming in. Somebody with a fresh new set of eyes, and they're going to come at this differently.
But is it always best? Because I'd listened to a conversation I had before you as the CEO going, it is 100% about the team. That's the difference here. So go on, defend yourself.
Well, that is the case. I mean, when you're looking for this, it's not a Hail Mary. And we talked about a few of these things before in terms of things that we can see. We can read these press releases and see what people are finding. And while they're expounding on the fact that this is this, we say, well, we think it's a little more like that, but that's fine. They're going to make their news, or they're going to make their news. We have been handled drill core from right across the province, and I can tell you that the stuff on the east is different from the stuff on the west, and I can tell you why it's different, and I can tell you how it was deposited differently, and where it came from differently, and the different technologies and techniques that we use that don't work at depth. They work here, they don't work there. We've got, our team has been doing this for decades now. And working with people like Cameco and Orano, who also have been doing it, and it makes a difference.
It does make a difference.
It makes a huge difference. So we're spending, we'll spend $1 million or $2 on a project. We look across the map and we see somebody spending way more,
right,
in probably not the most effective way.
Right, and I buy that, but the pace at which some of these companies are moving can make the difference. I think we were talking before we started filming, we were talking about, the next gen money going to ISO allowed them to get at it really quickly, and they hit it out of the park. But there's a bunch of companies who are taking advantage of markets when they peak, raise some money and get after it. And people are excited by some of the headlines, some of the stories that are coming out. How do you do that? Because I think if I'm looking at the Orano and the Camecos not spending the money as quickly as you want them to, or they could do. Can you extricate yourself from that conversation? Do you want to? Because they are names.
But you're playing a different game too. I mean, if you look at, and we've done this, and you can see our graphs, but if you look at the stock price changes of there's like 11 public uranium exploration companies in North America right now, trade in North America. And you look at the graphs of their price change, and we all move together.
Follow the spot price.
We don't follow the spot price, but we definitely follow each other. And if you look at ours, we exactly follow the average.
Yeah.
Whereas you'll see others that they're all over the map.
Exactly.
Well, that's fine. So that's what they're doing. But what are they doing? Okay, they're going up 50%. They're going up 75%. That's not bad. Yeah. But if you look at the actual, like the last 4 resources that were actually put out in the basin, like an ISO, you mentioned, if you owned their stock before, in a couple of months, you made a 10-bagger. Yeah. Same with NextGen, it was a 10-bagger. If you had a Hathor, it was a 100-bagger. So, I mean, that's the game we're in. And you don't do that stuff overnight. And if you look at those companies, those are the ones that were there for a while, and they had the team, and they had the money, and they were drilling in a lot of places and a lot of different projects before they found the one that paid off. And that's the business we're in. We're maximizing the likelihood of being the next discovery, because that's where we make it all back.
Yeah, and I don't want to be unfair. It's obviously there's a 10-year lull after Fukushima where not a lot was happening anywhere. So when you say you've been on 10, 15 years, it was 10 years of,
we were sitting in a cooler for 10 years,
Let's sit in a cooler for 10 years, and then we'll start to come to play. And we've been talking for a couple of years now. So I'm interested in how you play the market, because some of our companies are very promotional, and they make extraordinary claims about discoveries after one hole. Those sorts of things I do find hard to stomach. And you've got other groups trying to do things the way that the majors do, because that's where they kind of come from. But it doesn't excite or engender excitement from the markets.
Right.
But at the end of the day, if you're all bouncing along to the same rhythm,
so who's going to win at the end of the day? Well, okay, so here we came into this cycle 2 years ago, let's say. The world decided that yes, the supply and demand in uranium and prices coming back, and we saw a lot of extraordinary claims come out of the world, and quite frankly, none of them have turned into anything during that period of time. For those people that are making the claims, well, they have to live with those claims now, and I think that's where it kind of rolls back. Right. So if you're planning on playing this game for a year or two, fine, go out in glory. But I mean, if you can't prolong that story when it's not really there, or when it doesn't turn into something that it's supposed to turn into.
Style over substance, is that what we're going with?
Well, absolutely. Well, you've got to live to fight another day.
Yeah.
And if you blow it all out in the first year or so, then you have to live with that.
No,
story.
I agree with that. You got to be at the table to play the game, right? So I understood, and that's been the nature of the game for the last few years. But now I think you've got, where are we, 20 million market cap, 25, something thereabouts, depending on the time of day, right? You've got to start motoring now. So what are the things that you feel like you're in control of? You got $8 million bucks in the bank ish, right? Thereabouts. So tell me where you create the value.
So what we've got is 12 projects we talk about, and
but that's a liability. There's too much going on there. Again,
well, but there isn't, because what that means is we now, and these are projects that we understand well. We have boiled them down from a much larger package of projects. These are the ones that we know, we believe, have the most perspective, and we know that because we've been doing this long enough. And now it's really about drilling. You're not going to find anything unless you drill.
You can drill all 12?
We can get to 12. We can take on partners to help us drill those 12. Would we? In any particular order? I hope we don't have to drill all 12 before we get to the bottom of the bucket. No. Next week we could be putting out the big one. Who knows? Right. But that's it. So you put these things obviously in a priority, and you start working through them.
So give me the drill program.
So our highest priority right now again is Hook Lake. Okay. We're drilling into a new large area where, and again, this is based on all the knowledge that we have from the other two deposits in the area and all the other work we've done, and from our partners. We have a very large area that we believe is probably one of the best untested areas in the basin right now for bringing to fruition something of a size that is going to excite the likes of Canada.
Based on what? Why do you say that?
Based on a few things. If I had my geology maps here, I could show you. But it's based on the rock type that we know is there. It's based on its proximity to the heat source for mobilizing uranium. Okay. It's based on the structure that we know is in the basement rock in that area. Yeah. And it's based on drilling that we did 14 years ago. We had one drill program there 14 years ago. Yeah. Before anybody discovered anything in the area. Yeah. We were looking for something at a shallower depth. All of a sudden things lit up next door over at Fission, and we moved all of our attention over there. We're now going back 10 years later with 10 years worth of learning and drilling and understanding of that area, looking at that rock in a different way and going, oh my gosh, we were just starting to get into something that would now excite us. And that's where we're going back. So we're basing it on a lot of information that we now understand and know that we didn't know 10 years ago. And that's why we're heading back there. Okay. The other two projects we're drilling on right now, one is one that, again, 10 years ago, we've taken this stuff out of the cooler. We're following up on uranium we found 10 years ago. And we're now following it in an area, and we're finding that it's over quite an expansive area. So we're now chasing where that uranium came from. Okay. And that's the work we're doing there. Another project, Turner Lake.
So explain that. So again, on an issue, you're chasing where it came from or where it's gone to? Because obviously you want the deposit.
Where it's going to.
Going to. Okay.
Right. So what we're finding is mineralization over a much larger area than we're used to seeing it, which means that at some point in the Earth's history there was some sort of mineralization event and uranium was moving around in the area. Yeah. We've chased this thing for over a mile now. So once we've figured out the boundaries of it, now we have to get more defined, and hopefully we're going to find the structure and the rock type that would be conducive to a deposit. So you follow the clues. Turner Lake, which is another one that we're drilling right now, we're just off the claim line of where IsoEnergy found a 35% ore body. Yeah. I mean, so we're not that far away, and we know that the trend and the geology heads in that direction. So we got to go up there and start poking holes up there as well. Okay. So we have a lot of cards that we can play, and we have to keep, depending on what we find in these drill programs going on now, we'll determine where we're drilling in January.
Okay, brilliant. And I want to talk about the actual drill program and allocation of capital specifically in a second. But because the job I think you've got to do or start doing is say clear, defined plan. I get being agile and having to react to data and so forth, but just because Fission had a hit, so we'll go somewhere over there. Well, just because ISO had a hit, we'll go over there. It seems like it's sort of flitting, or you get distracted.
When you actually poke a hole through 10 meters of 12% uranium, then you quit looking elsewhere. Yeah. Right? Now you've found it. Right. Until then, you're following clues.
Right.
We all are. I mean, and fission, to your point, I mean, fission's out some really nice holes.
Yes,
and but they've got as many projects as we do, and they're drilling, as often as they can. And again, what's interesting about that one, how we equate that back to our understanding and learning of the area. We know that where we're going to drill at Hook Lake is just off of this particular domain that we know now is the heat source that mobilized the uranium and pushed it out. And so that's one of the clues that we're following, is that it would have pushed it our way. Well, fissions is on the other side of it, and it pushed it that way as well.
Right.
So the fact that they've found it there and the way that they found it in the structure, I mean, we can use that information to understand what's going on our side. But we are, chasing clues constantly. But when you do actually hit something of, that is deposit worthy.
Yeah.
I mean, remember, when people are coming up with half a meter of whatever, the front end of a front end loader is 6-7 feet long, so you haven't got a deposit.
Yeah. Don't have to remind me. So again, let's talk about the money, because the money's important. You're going to drill. Great. But you use the phrase, "Well, we're fully funded." We're fully funded for what? Until when? Because again, in this market, I don't want to go down the thematic routes. It's a great market, great theme, but it's moving slowly, right? We've gone from $30 to be fair, late 20s, early 30s, through to $50. Super. Conversations around term contracts happening all the time now. Great. But we're in a kind of holding pattern at the moment again, right? Sure. So we don't know if it's going to last to 2024, like the industry, the trade bodies are saying. Which is a long time.
It is a long time. Well, in our world, it's a long time, and so there is some mechanics to how we fund and how we prioritize our money, and a lot of it comes. And we've talked about this before about the flow through programs in Canada, right? So we can raise money on a tax beneficial basis in Canada for work in Canada, right? And we've said this before. I can sell you $100 worth of shares, and I can give you a $100 tax deduction at the same time. So that money's not that hard. It's always hard, but I mean it's easier to access, but it can only be put in the ground. I can't pay my salary with that money. I can't build an office. I can't come to this conference with that money. So and I can't pay the exchange their money with those dollars. I need hard dollars. I need dollars that aren't flow through, and that's the hard money to find. So when we talk about how much money we've got in the bank, we know the split between what we've got that's hard money and what money is for the ground. The money that's going in the ground is always discretionary. We can.
There's a time frame, right?
Drill or not drill. I mean, it's that easy. But the hard dollars are always difficult. So we've got about $2.5 million in hard dollars that we can apply against overhead.
Yeah.
And we only spend $500,000 to $600,000 a year in overhead. So that will keep us going as long as we need to keep going, no matter what the markets are doing.
Yeah.
From there, we just budget what we want to do on a 6 to 12 month basis and raise money as we need it. So we get our budgets out of Cameco and Orano for Hook. That's a pretty easy, simple one.
Yeah. What do they pay you?
They pay us a 10% management fee for that project. Okay. So we own 21%. We have to come up with our, our budget this year, let's say $2 million. So I've got to come up with my $420,000, but then I'm going to get paid back $200,000. So it costs me $220,000 for this program. That's not bad.
Yeah.
Which means I've got money to apply against other drilling. And drilling costs are roughly, you can't really do it by the meter because of the nature of what goes on out there, but it costs me about $1 million a month to drill. So if I'm going to go out and do a program for 2 months, it's going to cost me $2 million. And that's how we look. So we know that our priority projects right now outside of Hook are, let's say, Turner and Red Willow. We'll get out there and drill. And again, it depends on whether you're in the summer or the winter.
Right.
Because some places you can't get to other by the helicopter. And that's very expensive. And you can't helicopter in the winter because the days are short. So I mean, there's that kind of stuff that it's as a practical approach.
Sorry to get into weeds, and I always like these conversations to be short and punchy, but we're doing some interesting conversations now, or interesting topics right now. So $2.5 million hard dollars would suggest, let's say $5 million flow through.
Yeah, well,
ish.
3 or 4.
3 or 4. Okay. If it's 3, it's 3 months of drilling. You're telling me. Or if it's 4, it's 4 months of drilling. You're telling me. Depending on the time of year. but you when you go at it, you can't deploy for a week here, a week there.
No, so
you got to go, right?
We're looking to spend. We're looking to spend about $5 million next year in the ground. The price in the market being as it is right now, we chose not to raise it all right now.
Right, got it. Okay, but you've got 3 or 4 of it now.
Yeah.
But you'll need to raise a little bit more. It's the name of
Before the
exploration
summer.
game.
Before the summer.
Before the summer. When's the drilling start? When are you starting January?
It's seasonal. There is a seasonality to this, right? So we will start in January to do the winter. We'll finish up what we're doing now. Like we're drilling now. Yeah. We'll finish this before the end. Well, probably within the next couple of weeks.
Right.
We'll start up again January 1 or 2.
Okay.
We can only drill till about March, April because things start to melt and we have to be out of Dodge.
Got it.
And then we're not really allowed back in till later in the summer when things are dried up, and we can then drill through the fall.
Okay, so it sounds like you could get 2 or 3 months in from January, right? Depending on what your drill plan is. And then when you come back in the summer, you can go at it for 3 or 4 months then, but you'll need to raise, sounds about
some more money.
$2 to $3 million.
Yep.
Okay, good.
Yep.
I understand the plan.
Took so long to get it out of me.
Thank you. Right. No, I get it. It's just like there's some companies I feel are more real than others, and it's, some have plans which I don't quite understand. I think it's really, really important to get.
Well, and because we're in exploration, we don't have. I can't give you our 3-year plan on what we're going to do month to month. What we do in January will depend on what we're doing right now. Where we drill at Red Willow will depend on what we see in the results this month. So we've got 6 other targets to get to at Red Willow. So if what we're doing now, maybe we see something more interesting over there, maybe we'll shift things over there. I mean, these are all things that have to be tested at some point in time because they all have the opportunity to be deposited at the end of the day. We just have to make sure we're constantly prioritizing and getting to those things.
Good. Get after it. We'll see you
I'll get
soon.
on it.